Oh my goodness, 2020 was an insane year. So many of you made so much money on the stock market, and I'm proud of you. Good for you. I've been getting a lot of questions, specifically how taxation on the stock market works, how cryptocurrency is getting taxed, a lot of questions. And today I want to take 5 minutes just to give you a simplified overview from 10,000 feet about how to tax your profits in the stock market. I know it's not fun, but it's important because if you don't do it correctly, you may stand to lose a lot of money and in some cases, even your freedom. Yes, people go to jail or prison for not paying taxes correctly. So be careful with your taxes. Somebody asked me, if you don't sell, do you still have to pay taxes? Basically, I think what the meaning of the question is, let's say you bought a stock for 50 and now the stock went up to 100. Let me give you a live example. So if you see here, I posted on our Patreon page on November 24th at 11:37 a.m. I posted exclusive for Patreons. TWLO, which is Twilio, has 80 to 100% upside. Now, I posted this on November 24th. As you can see, on November 24th, the price was $292. I'm sure a lot of my patrons bought the stock at $292. Right now, the stock is valued at $435, meaning it went up by almost 50%. Does it mean that you have to pay taxes on this 50% that you actually made on the stock? No. Because what you have, unless you sold the stock, what you have here is unrealized gains. Those are built-in gains. Until you actually sell the stock, you don't have to pay a single dime in tax. This is a very simple principle in taxation because no taxation without realization. Realization means selling the actual asset that appreciated in value. So as long as you don't sell the stock, there is no taxation. And now to the second question. Is cryptocurrencies taxed different than stocks? And is there any difference between a specific type of cryptocurrency as far as taxation? Great question. Well, first of all, there's no difference. Every single cryptocurrency is created equal. Imagine a constitution of cryptocurrencies and everybody has the same rights and the same duties, meaning that all cryptocurrencies are taxed in the same exact manner, which is exactly like stocks. As long as there's no realization, there is no taxation, meaning as long as you didn't sell your Bitcoin or any other cryptocurrency, there is no tax implications. And now to the next question, and it's kind of interesting. What happens if you actually buy a stock, make a profit, exit your position, use the proceeds to buy another stock, and then lose money? Do you still have to pay tax? Well, the short answer is not necessarily. Let me give you a numerical example. Let's say you invest $50 in the stock market. Let's say the stock appreciates to $100. At this point, you say, well, I've made my money, pretty much like Twilio. So now you've generated a profit of $50 by selling the stock, which you have to pay tax on. There's no question about it. However, what happens if a day later you decide to buy a stock for $100? You buy the stock, that stock goes to zero, which means that the $50 you had in gain earlier gets offset against those 100. And here's a follow-up question for me, which you didn't ask. Well, what happens to that extra 50, right? I had a whole $100 of loss. I only used $50 to offset against it. What am I going to do with the other $50 I lost this year? Is it just goes away? No. What you actually can do is carry it forward to future years. There's specific rules about it. That's way more complicated for this video. But in general, you can carry forward losses to future years against future gains. But you have to consult your accountant, your lawyer about the specifics of how to get it done. Now, a question about rates. This is really important. Now, what is the tax rate on stocks? So let's keep it simple as we can because this is a complicated issue. So let's just simplify things. Let's assume it's an individual, not a company, not anything else. So for an individual, there's two pathways for paying tax on these gains. Short-term, long-term. If you held the stock for under a year, you're paying short-term capital gains, meaning you're basically paying whatever your individual tax rate is on these gains. However, if you held the stocks for over a year, remember my strategy, holding long-term, if you held the stocks over a year, you get a tax benefit. You pay long-term capital gains. That's really important. And not only that, if you made under $53,000, you're exempt, 0% tax. If you made below $470,000, you only pay 15%, which is a huge benefit. And only if you made above $470,000 from capital gains in that specific year, you pay a 20% rate, which is also beneficial versus your individual rate, which may be a lot higher. Now, here's the thing. That also kind of comes along with me saying, hey, let's hold things long term and let them cook. And now a really important question. Do I have to run an Excel spreadsheet tracking every single sale and purchase I make? I'm going to go crazy. No, you don't have to do it. In fact, in about 2 days, you're going to get a little form from your brokerage called 1099. That form will have all of your information, exactly all your transactions. You're going to give it to your CPA or to your TurboTax, whatever it is you have. And then you're going to add it to your 1040, which is your individual tax returns. And then pretty much that's it. The only thing you actually do have to make sure that you actually keep track of is the fact that you hired a good professional to do your taxes, because you don't want these guys to screw up your taxes. That can be really dangerous. Now, let me know if you want me to do more of these informational question-based videos. I thought it's important for me to explain this because in 2 days, people will be getting their 1099s. I know there's a lot of new people in the system who've never gotten a 1099 before from the brokerage. So I just wanted to explain to you how this works, why the numbers the way they are. Let me know if you enjoyed this video. If you have any questions, let me know. And also, if you followed through the video, let me know how many of the answers I answered you already knew in advance and how many you didn't. I'm really curious to see. And as always, everything you heard in this video was strictly my opinion, maybe inaccurate, maybe completely wrong, maybe the ramblings of a madman. Do your own research, consult with a professional. We'll see you guys in the next video. Allegedly, blah, blah, mother effing blah.